Good morning, everyone. And thank you for joining us today. Many of you probably know me, but let me introduce myself for those of you that don't. My name is Maria Pagura, and I head up AgriFin's Knowledge and Networks program. On behalf of the entire AgriFin team, I would like to welcome you today to our webinar, it's a special webinar because it is showcasing a new publication that AgriFin has produced, the Agricultural Value Chain Finance, a guide for bankers. Typically, we feature other people's work, but today we are featuring our work that we did with bankers. I will be wearing two hats today. Usually I facilitate the webinar series, but I also will be presenting a bit during this session. I was the lead technical officer for AgriFin on this work, so it is a great pleasure for me to be able to share all of this information with you. As many of you know, AgriFin, our ultimate aim is to catalyze learning about successful agricultural finance models through sharing of practical information with you all, by fostering peer-to-peer exchange. So we get our peers in the banking sector to share their experiences with you. I apologize for the interruptions in the background. Those will be muted shortly. But today we're very excited to be sharing with you the Agricultural VCF Guide for Bankers, as it is an excellent example of how peer-to-peer sharing can be leveraged to impact and benefit our clients. And when I say our clients, I mean bankers, agri-bankers in particular. And it also benefits their clients, our clients of our clients, aka the farmers, the agribusinesses, and all the people in agricultural value chains. Today, I'm joined with Michael Andrade of HDFC. HDFC has been a long-standing partner and dedicated partner to AgriFin, and just an exemplary example of how sharing and their willingness to share their experiences has impacted many of you on this call today, but many more people in our network. Just as an example, Michael and his team were key partners in this effort, sharing openly and providing content to the guide and providing critical feedback during the write-up stages of the guide. I've asked Michael to join us today to speak about HDFC's approach to VCF and why that's important to their agricultural lending business. I've also asked him to share with you why HDFC, a private commercial bank, was interested in joining AgriFin to produce this, what we consider a public good for all of you. He will also share some advice on how you might want to get started or in your own banks. So Michael, thank you for joining us today. We are also joined with Carlos Cuevas. I've asked him to be on the webinar with us today. Carlos is an agricultural finance expert, and he was the senior technical advisor and co-author of the guide. Carlos played an instrumental role in framing and implementing this work, so I've asked him to join us to answer any questions that you all may have about this work. He brings a wealth of experience in the agricultural and rural financing sector globally, so I'm very happy that Carlos was able to join us in spite of the time lag. It's 6 a.m., so Carlos, thank you for getting up so early. Unfortunately, we were not able to have the other two banks that partnered on this initiative, just in essence of timing, and that I asked one bank to join us, but there were two other banks that would be mentioned. That's Banco Ola Mexico, for sharing how they select and evaluate different value chains to develop these models and grow their business segments. And also HBL from Pakistan. And Pakistan's an interesting case because they're really wrestling with how to catalyze their knowledge, but also to develop value chain financing models to a very important sector, and that's dairy. And I know there's been a lot of cross-sharing between him and Michael and HDFC. So just great examples of the peer-to-peer. Before we get started, I would just like to go over a little bit of housekeeping. As usual, I'd like to let you know how things will follow to give you a bit of a guide of this next hour together. As I said, I'll be presenting wearing two hats. I will start by making a brief presentation about the guide, what was the rationale for AgriFin to invest resources in this, and what it contains and how it can be used, etc. I will then shift the spotlight to Michael and HDFC, asking him to share his experience and his team's experience in this project. This will be followed by a quick walkthrough of the online version of the guide. We did something unique, and that was to make this widely, disseminate this widely and make it widely accessible to the audience of very busy bankers. So I want to walk you through how we've broken up the guide and made it more into smaller pieces that you can walk through with your teams and your staff in your banks. Then we'll round out the webinar, as usual, with our Q&A from the audience. For those of you that have been on a webinar, an AgriFin webinar, you know that we ask you to write questions in the chat box that is located at the lower right-hand corner of the screen at any time, and we'll be collecting and organizing those questions, and I'll facilitate those Q&As with both Michael and Carlos and with myself. So without further ado, let me now put on my presenter's hat and go to the presentation. So why did we invest resources in this effort, in this guide? We have seen that through our experiences sharing, actually with Michael and many other banks, about 2 or 3 years ago, they were showing some very excellent results in reaching large numbers of smallholders through these value chain financing mechanisms. And during a roundtable at one of our forums, the forum in Sri Lanka, the bankers point blank said, for us to be able to reach those numbers and to scale them and scale our business, it has to be done through this VCF mechanisms. Michael will share a bit more about how that's important to their overall business of lending later in this presentation. Well, we were confronted with that information, and we said, what can we do to fill that knowledge gap and really give the how-to of practical information on value chain finance? Looking at the literature and the resources available, there were a lot of information out there, but none that really targeted and focused on the how-to of doing it for practitioners. And so we thought, this is an excellent opportunity where we can leverage our networks of bankers and get their buy-in to help us develop this resource, something that would be unique to any other information that was available. So that's basically the rationale behind this resource. Just a quick overview, many of you may know this, but what's the difference between traditional lending and using a value chain financing approach? One characteristic that singles it out, it's rather than just a simple credit risk assessment of individual borrowers within the chain, AVCF requires you to take a more comprehensive assessment and understanding of the entire chain. And that means all the relationships, the flows of information and goods and finances, and then how do you leverage that to finance that chain in a profitable business manner. AVCF, or value chain finance, also leverages, this is a really critical point, the aggregation of farmers to diversify risk and cost. It makes business sense. banks are not going to be able to service farmers individually, especially smallholders that are very remote and distant areas. We all know the cost of delivery to that. But the value chain also offers risk-sharing potential in many areas in the guide. We talk about risk-sharing and instruments where you can share those risks with participants across the value chain. That makes business sense for both the banks, and for the people that are being financed. Now, a lot of people say, well, what are value chain finance products? And you'll see in the guide, there's nothing new, or these are typical bank products, but they just need to be maybe tailored around the margins, or in your contracts, your loan contracts and servicing contracts, to meet the needs of the chain. So it's nothing, there's nothing mysterious or new about the financial products and services. These are typical bank products, but you're just using them in a different way that meets the needs of the entire chain. As I said, VCF examines the flows of goods and information and money and up and down the value chain, and how the bank can leverage that information to their advantage, but to manage those risks, to reduce the costs. In the guide, we show examples of how the banks have done that. So when we set out to do this, we said, okay, what is it? In very much the AgriFin vein of keeping true to our mission, which is showcasing, offering practical advice. The objectives of the guide were to do just that, provide that practical but evidence-based guidance. So based on bankers who really have had a good experience in doing these models and sharing with you candidly how they did it. So documenting and providing that in a stepwise framework to you financial institutions that are interested in developing such models. We also wanted to make sure that we captured that the comprehensive picture of the overall agricultural value chains. We tried to bring in as many examples as we could to where these banks are utilizing them, so that it would enable you to have a good understanding and a good picture of how these institutions are working with different segments of the value chain and different sectors of the value chain, and then how they adapted their products and specific demands of the value chain participants. And then, again, I've already mentioned this, but the practical examples of the products and the procedures, but also the potential for upselling, not upselling, but extending your products and services beyond loans. So HDFC, I don't know if Michael will have a lot of time today to talk about it, but in his webinar that's coming up in April, he'll be able to share their experiences of how they started with a simple, actually they didn't start with loans, but they started with a payment system, which led them to a whole suite of financial products and services. And he'll highlight that in his April webinar, but may be able to touch upon that a bit today. So it's no surprise I've been talking about this, and we've marketed this as the guide that's been created, who's our attendant audience, and we've just been really forthright in saying this is a guide that's been created by bankers for bankers. Now, in reality, AgriFin bought their resources, their technical and financial resources to put it all together, but this was really a straightforward partnership between HDFC, HBL, Bancaul, and AgriFin. And it really has been developed by the practitioners carrying out or doing value chain finance in their own markets. Now, a key component of the development of this guide we did do field experiments or financed what we call deep dive studies into new markets that these banks were interested in pursuing. So that was a big part of, you'll see a lot of examples coming out of those field experiments in the guide. I've already said this to, several times, that it documents the peer-to-peer sharing and the how-to, which is just part of our DNA at AgriFin. I would like to highlight that there are examples from other banks that are active in VCF, for example, Yapı Kredi in Turkey, Rabobank in Brazil, and both of those banks have contributed staff and their knowledge and expertise to our value chain financing training, or what we call boot camp, that we've carried out in Africa and in Asia with great success. So let me just briefly highlight how the guide's broken down. As I've said earlier, it's a stepwise framework. It really is. It walks the reader through each step of the process, basically organized in these 8 following steps, from making the business case for value chain finance. Sometimes banks internally will have this discussion, and that part of the guide is very good to foment the discussion on why diversify into value chain finance, why to employ that type of model for your bank, how the information in the chain can be used to inform lending practices. It just really outlines the main components for the business case, and I think that information can be used throughout the process, especially if you have, senior management that may be a little bit hesitant. That can guide your discussions in that regard, or they can review that. The next step was identifying a target value chain. What is the basis for identifying it? This chapter really explores the qualitative, but also the quantitative criteria for evaluating the viability of a given chain or multiple chains, and how you make choice. Our partner, Bank Gaul, was very instrumental in making that a systematic approach that they use in their bank. The next step, mapping the value chain. This is really once you've decided on which chain, now you have to go in and really get that market intelligence on the chain and figure out, all the actors, and identify and quantify the flows and the relationships that make all those products, inputs and production, and the processing of those products work. So this really highlights the importance of understanding those relationships and how you might start to think about entering in at what point, which leads to the next step. How does the bank choose an entry point for working? There's a lot of reflection that needs to go in about what a bank, at what point or what actor should the bank go in. With a successful mapping in market intelligence, with good market intelligence, of looking at those flows, the information and financial flows, it's possible to really, that will give you the information you need to really look at the different actors and the opportunities that you can start. So I always go back, and Michael, excuse me, you could reiterate this or clarify this point. I remember a while back, Michael said, yeah, we just went in, they had a client that they were working with, and they went a processor, and we asked them what their pain points were, and they were really struggling with, at that point, the payments to all their suppliers. And it really can be that simple and that straightforward, is looking at those pain points of the actors and how you can leverage those linkages. The next step really focuses on the financial products, and looks at or demystifies traditional products from value chain products. Our there's not much to demystify, as they're very very similar, and it's more of a matter of changing around the margins and than really a radical new product. But these are basic loan products for production, some investment products if you mature to that relationship, but payment services that help to make the flows of finance more efficient and effective, cost-effective for the bank. The next step, of course, is on, we've lumped in the guide risk management costs and returns into one chapter. You will see on the online version, we've broken that into two, but it really is important to understand what makes agricultural lending in this context feasible. And you have to really look at the opportunities for sharing risk and costs across the chain. There are numerous opportunities, and the banks that we've partnered with have really demonstrated how leveraging those relationships has impacted their bottom line. The next step is then, once you've decided or one of the decision points into about adopting a value chain approach is what impact it would have on your banking structure and operation. What are the necessary changes in the practices of the financial institutions? How is it, is this a radical change to the structure? Is this something that is more fluid that can be handled in a pilot team across different segments from retail to corporate? We talk a lot about those issues in that step of the process. Then lastly, we have a chapter on piloting the project and going to launching, from pilot to making it business as usual. This is very much a process, and to make it business as usual takes a lot of experimentation and trial and error. We also present in that step proposal and a business plan in templates for that, to prepare the team that's working on this to make their presentation to senior management to get their buy-in. So just quickly, the guide can be used in many different ways. It can be used by senior management to help them understand better the strategic benefits of the value chain. It can be used by heads of lending departments and their teams to implement value chain finance. It can also be used embedded into the core training curriculum of the bank and or for self-study of your staff that are contemplating or want to expand into this area. But it's also important to acknowledge our development professionals supporting agricultural finance projects. This is a great learning resource for you as well, and how you may be interacting and guiding banks that are operating or engaging in agricultural lending. As I said, the guide comes in two formats. We have the full PDF version available and an online, what we are calling a high-level overview version, and I'll talk a bit about that once we come back from Michael. Okay, so now I'd like to shift the discussion, the spotlight to Michael. Michael, are you there? Is Michael there? Yeah. Hello, Michael. Yes.
Yeah. Hi.
Yes, that's great.
Can you hear? Yeah. Hi.
Yeah. Okay. Michael, thank you so much for joining us. Michael's joining us from India. It's the end of his day, 8:30 or 9 p.m. So thank you for taking time out in your busy schedule.
Welcome.
And more importantly, thank you for your partnership in this project. As I mentioned to everyone, I just would like you to ask you a few questions. If you could share, HDF's, experience in value chain finance and the growth of it. You've been a pioneer in your bank leading this effort with the support of your CEO and that. But could you talk a bit about HDF's business model and how that is important for your agricultural lending business overall?
Sure. So coming back to the point you made, Maria, about the pain point that some of these companies had in making payments to their suppliers, I'd like to take a step backwards to the pain points that we had as a bank in doing agricultural lending. So in India, we have a program or a product that does agricultural finance against land titles. So mortgages taken against agricultural land, we do lending. So there were two major pain points in this kind of an open market product. Is one, because of the lack of information, it was very difficult to distinguish a good farmer from a not so good farmer. And the second pain point that we had was the cost, the operating cost. When we go below a certain ticket size, the operating cost does not get covered by the interest revenues. And the primary reason was servicing those loans, which generally is in cash. So every harvest season, we had to send out an army of people to connect up with farmers, collect cash to keep these loans regular. So these were the two pain points that we had in our lending against land titles. Coming forward to the pain points that the company had, so we did develop a good rural payments model around, payments to farmers. And the way the Indian agricultural farming market is, profiled is 80% of the farmers are real smallholders, and they fall in that bracket of farmers where it is not viable to do lending against land titles. So as we tried to push out from the top end of the market to the bottom end, we thought that this value chain approach helps us, number one, with the information flow that we get by virtue of being in partnership with the value chain, and it helps us in reducing our cost by having the payments directly settle these loans. So that was the basic, hypothesis or the concept that started us out in looking at value chain finance. Yeah, Maria?
Yes, I'm here. Thank you, Michael. I think that gives our participants, especially banks that may be on the edge, a good idea of your motivation on that. Now, many people in the audience will know that our longstanding partnership with HDFC, we've been repeat engagements, shall I say, and we've learned a lot of lessons about, in terms of our business of facilitating that peer-to-peer and why banks are motivated to work with us or why they're not. It does seem like an odd marriage that a private commercial bank would be willing to share what sometimes is proprietary information about their business model. So if you could talk a bit about, what the partnership with AgriFin on this activity has meant, and maybe a little bit broader, because you have partnered with us on many of our activities, shared at many of our forums, and hosted study tours and that. I think it would be a really benefit to our audience to hear about that from your perspective. So
one is that we get limited by our local markets and local processes and local systems, and partnering with AgriFin, exchanging ideas and hearing banks from other parts of the world, be it Africa or South America or even Turkey for that matter, broadens our perspective on what all can be done, bits and pieces, components coming in from here and there, of how it all comes together. So a lot of this value chain has actually come off those discussions that we've had over the years, starting way back in Hyderabad, moving on to Uganda and then Sri Lanka and, of course, Turkey. So it is a culmination of all the exchanges that I've had, and also taking it home back here and seeing what is applicable and what is not. So pretty much that is, it's an ongoing learning, peer-to-peer sharing that has been very useful for us, number one. Number two is on the VCF, we had this learning, we had the concepts, and we would have started off on a trial and error basis with a small pilot, and AgriFin helped us with a deep dive, which, helped us jumpstart and get, right into it and start business. So cutting the time to market. And that eventually has resulted in this guide and resulted in spun off into a couple of other businesses, especially the dairy value chain that you will probably hear in April. Dairy being a much faster turnaround cycle, we could move up numbers much faster. Seeds is almost an annual crop, so we have to wait for each crop cycle before testing and moving forward. So that's the kind of patience that one would need in agriculture. But yes, this whole process of sharing information and feeding back, I think it helps us all to develop in our, individual local markets.
Thank you. Michael, it's always refreshing to hear. It's hard for me to sit here and not feel a little bit embarrassed because it sounds like we're trying to tout our own horn, but it really is, for those of you that don't know AgriFin and the work we've done, this has been sort of a self-discovery or an awareness where we hypothesize something about the potential impact that bringing and coordinating and facilitating practitioners to share could have on the overall industry in terms of ag lending. We all know that the capacity to do ag lending and to really manage the risk and develop products that are appropriate for agriculture is very challenging. So in this way, it's just so practical to hear from banks like HDFC that are doing it successfully, but are also very candid about sharing challenges and getting into the nitty-gritty details on how they did this. One of the things that Michael, and I can't remember exactly the phrase he used, but when we asked him, how did you get this started? And in your bank, a huge commercial bank in India, and he said it was a team of oddballs. I don't know how he coined it, but they were willing to go out and really work hard and try something new. So just hearing sort of the day-to-day practical stories and anecdotes from banks, and then also on the flip side, here we're thinking HDFC has a lot to share, but they also, through this process, learned a lot through engaging with their peers that are operating in all sorts of markets. So thank you, Michael, for sharing on that. Just lastly, I know that the guide itself offers a lot of advice, but it's always more powerful to hear it from someone who's been in the trenches, who has the battle scars in that to really get this started. Do you have any, maybe 2 or 3 points of advice for the banks that are wanting to get started or want to expand in this area?
Well, we'd love the guide to be one of those do-it-yourself furniture manuals. But, really, you got to start somewhere and turn to the guide now and then. There is a lot of work initially. One's got to be patient. My advice to everyone is really to let the payments lead you into lending, because that gives you a wealth of information. And information is what's really missing in the whole agri-finance piece. So don't rush headlong into a lending program, but use the payments flow, test out the payments flow for a few crop cycles, and then base your lending product based on those characteristics, and turn to the guide every now and then to then develop that product. So that would be my pretty much my advice.
And that's exactly what you guys did. So it's based on very successful experience of HDFC. So that makes perfect sense. Thank you, Michael. I also, as I mentioned, I have Carlos Cuevas online. I've asked him to speak a bit, give his input, and it's a different perspective. He's going to be speaking a bit to all of us, myself, the development practitioners that are really helping support the sector. He's had a long experience in agricultural finance and rural finance and is just an expert in this area. He was critical to the development of the guide. So, Carlos, I just want to pass it over to you to get your input on the guide and how people can use it and really share your thoughts from your perspective.
Okay, thank you so much, Maria. I hope everyone can hear me well. And good morning from Seattle to everyone in the webinar. Hi, Michael. It's been a while.
Hi, Carlos.
It's a pleasure for me to participate. I very briefly just want to highlight some of the things that have been said, but that were critical to the idea of developing this guide, and then the implementation of the work. And I think in passing, Maria has mentioned some of these elements, but I just wanted to highlight that the guide is not the very first thing AgriFin has done with partner banks. The AgriFin has been active before we started thinking about the guide. But one thing we learned in that process before starting the guide is that bankers, financial practitioners, listen a lot more attentively to their peers than to technical experts coming from international banks, kind of thing. And that's something that's stuck in our mind, saying, well, we cannot come up with a guide that's, I guess, the World Bank trying to tell people what to do. But what we have done in this guide actually is compiling, because the bankers are too busy doing their business, information that leading bankers have, and knowledge they have. Myself, Michael, and our partners in Caol and HBL were already active in value chain finance, and we were fortunate that we found them kind of at different stages of developing new value chain finance initiatives. Caol is already active in a couple of important value chains in Mexico. They were trying to figure out how to identify a new value chain where they could use their already tested model of dealing with basically with processors and aggregators to reach smallholder farmers. HBL also active already in value chain finance, but engaging in a partnership with a large dairy processor to, again, expand their market to small dairy producers in Pakistan, which dominate the market in Pakistan, but are not financially included, to use that expression. And then HDFC, Michael and his team, who really developed the A to Z process during the work we did together, from having identified a value chain, a possible value chain, to understanding it, mapping it, and figuring out what products and so forth. And then particularly Michael was instrumental in the contributing what, now that you know all this, what do you do internally in the bank? And Maria already mentioned that, but it's got to be a team there that says, okay, we'll give it a try at least and get senior management approval and so on and so forth to at least have a new, I think they call it a new project internally within their existing rules of operation, but then with the idea that if the project works fine, then they can adjust those rules. So it was, as Maria said, really interesting and for us a major learning experience. But again, comparing what leading bankers already knew and were exploring, and to make it available to everyone else. And that's what the Banker's Guide, the Guide to Bankers is indeed. It's an effort to say, well, this is what I would call cutting edge knowledge on, not on new products and stuff. One of our reviewers said, well, bankers know all these products. What the value added of this is to see how do you basically get into the information flows that are already there in the value chain and kind of internalize them in your financial operations, and that's kind of identifying the key points that are essential for a value chain finance project to succeed. So Michael already mentioned that you start with the payments, and that's a really good way. The other way, another partner said it, is that, well, you just lending to smallholders through the value chain finance is fine, but so they're financially included while they're in debt with the bank. But once they repay the loan, they go back to financial exclusion because they don't have other services. So the idea of having these other products around that same client is one of the, again, important points that the guide brings in. Maria, I think that's what I would add in terms of, as I said, mainly highlights. And I'm really happy that this is completed and really hopeful that people in the audience today in the webinar, but people who get into the AgriFin website and receive the guide in the near future can hopefully see that this is basically a way of putting everything together in one place, but it comes from the peers, from the financial practitioners.
Well, thank you so much, Carlos. I really appreciate your input today, and of course, it goes without saying your input throughout this entire process. And thanks for making the effort to wake up early to join us. I know that it's very early there. Just to your point, and a bit reassuring, AgriFin, we track very closely our downloads. We have very few ways to really see if people are utilizing our resources and that, but one way we do that is by tracking downloads and traffic on our website. In a very less than a week's time, we've had several hundred downloads of the guide, so I'm very happy to see that. We'll be we shared it with our members only at first in advanced copy, and now we're going out publicly through all sorts of channels. So the more we get the word out there and the people today can share that with their colleagues, I think the better. Now, I have a lot of questions that have come in, and not surprising, Michael, they're mostly directed towards you, the experienced practitioner. I would like to go to have a Q&A session before I go to the online version, because I think the question and answers are very important. The online version I can walk through in a few minutes. So, Michael, just some very pointed questions. I just start off with, there's a bank online that offered payments to farmers in Mozambique for a large buyer with about 100,000 farmers. And they found the investment required and the operating costs for the bank to do those cash payments was very high, and break even was only after a couple of years. This person's asking, could you speak about your business case for introducing payment services and how long it took you to break even on those services? That's the first question. There's other questions on how you measure profitability of your ag loans and are the products profitable? There's a question on agri-insurance. Do you offer that in your suite of products and services? I think that is, I'll leave it there. There may be a couple more questions for you. There was also a question, do you give credit to an individual or the entire chain and how the risks are shared? So those are four pretty big questions.
Sure. So yes, we started with the payments, and that is a massive investment. And just by doing payments, we don't really make the kind of money we want to. In fact, it's a negative. But that is the investment that we do to reach the loaning stage. And once we start the loaning stage is when we start making that money. Now, payments, I would like to correct over here, are not cash payments, but these are payments into a bank account. So it's necessary to open these accounts of these farmers and then make the payment into that account. Yes, we will need a cash-in, cash-out point at the local operating level for the farmers, which is in the form of a business correspondent. So that's part of this game. So once we have the business correspondent and the accounts opened, we make payments through that account, and it remains a cost up till this point of time. The second stage is then to move into a loan process where we do loans to individual farmers. Okay, here your primary risk now is site selling risk. And how do we address site selling risk? So we incentivize the aggregator to guarantee these loans that are made individually to these smallholder farmers and also double up as a collection agent. So as you might imagine, most of these aggregators are advancing money to these farmers themselves, and there would be resistance for them to switch over to becoming a bank agent and bank guarantor to the bank for these small loans. But the commissions that they get and the leverage that happens on the finance with the bank stepping in gives them a much bigger turnover compared to the money that they would have lent in the market. And essentially, these aggregators make more money from their turnover. So getting a buy-in from the aggregators is what then prevents your site selling risk. And then payments get paid into the account, and you don't have a problem of collections. So then we've taken care of site selling risk, you've taken care of market risk by and large with the off-taker, and you've taken care of payment risk. The only thing that now remains is production risk, and that is an essential part where you look at farm extension work that may be happening between the the off-taker and the farmers, or the aggregators and the farmers. In some places it is there, in some places it remains open, and you may be exposed initially to some production risk. Insurance is available in crop insurance, not so effective at this point in time. There are some new schemes that are likely, but in dairy, in cattle, every single animal financed by the bank is insured, and that is working extremely well. Yeah. And the last question is, how long does it take to break even? On a unit basis, one aggregator, maybe 50 to 100 farmers initiating the payments, it takes around 18 to 24 months. I'm not talking about the pilots. Pilots take much longer, but you have to stick to them. But once you're past the pilot phase, then 18 to 24 months is break even, and then profit after that. And I think the last question was, and I think I mentioned it, the loans are to the individual farmers. It starts with the loans for the produce that are in the value chain, and then it moves on to other loans. So it could be vehicle loans, it could be personal loans, those kind of loans for the other crops that he may be producing. And that way you have a complete ecosystem at a reduced cost compared to doing this same set of transactions on a case-to-case basis, on a one-off basis, on an open market basis. So this value chain keeps building on itself. So the initial investment starts to pay back, takes a little time initially, but then it's a rapid upward J-curve after that. Maria, did I get all the questions in?
Yes, I'm sorry. My mute function, it has a little bit of lag there. Thank you, Michael. I really appreciate that, your input and your response to the questions to our audience. I'm sure the members in the audience, I already have questions coming in. Can you please put me in touch with Michael? So beware, there'll be more questions. What I'd like to say, along with
Sure.
Mike's presentation today, there's a lot of resources on HDFC's model through different forum presentations and that where you get a good understanding of their experience in the design features as well. Many of their examples are featured in this guide. So don't feel like today's your only opportunity, but I would encourage you to join us in April when Michael walks you through exactly the step-by-step of their dairy value chain financing model, which has proven to be very successful. And you'll learn about what he just talked about on the payments platform and how they use business correspondence and aggregators to make that model very profitable for the bank. One thing I've appreciated from working with several of the banks on this initiative is that they seem to be very forward-looking, whereas the client today, they view them as clients of the future. They may not be as profitable today, but through this relationship, which that's what we're all here about. Banking is is all about a relationship with the borrower. That HDFC in particular has taken a long-term vision of capturing those clients and bringing them into the financial system in a long-term sustainable way. So when we talk about financial inclusion, and I think Carlos alluded to that in his comments, we're really talking, I think we should be talking more about the sustainability of financial inclusion, not people drop in and out, but HDFC has taken a very serious approach to inclusion in for the long run. So I applaud their efforts. And I think a lot of people could learn a lot from you and your team, Michael, at HDFC. Now, I see the clock is ticking very quickly, unfortunately. We're very obsessed here about keeping on time. So I'm going to cut off the Q&A there. I just want to address one question where a participant asked if we plan to continue producing next editions and new implementation of value chain finance, and a resounding yes to that effect. And that's why I need to share my screen now. That's why we have created this online version to really make it a living document. I'm sorry, I'm just getting a little bit of help as I segue into our website. To show you just very quickly what the website, where the guide can be found. So everyone should be able to see my screen now. Are they seeing it? No. I'm sorry. There we go. Okay, now everyone is seeing the screen. This is what we put the guide. We went the extra mile. We have the PDF full guide version that you can download, copy, share, digest for those who really want to take a more systematic, deep look and absorb it in its entirety. But we also said as a team, we said, how can we make this very easy to access, shareable, and instead of just having the guide up on the website that sometimes can get buried, we allocated resources to creating what we call a microsite within the website. And it basically just leads you through the process with this infographic on the right-hand side. It takes you through the various steps. You can get a good overview on each of the steps as you glide over, hover over the different titles and the colors. I want to shout out to Tata Interactive Systems for their excellent partnership in developing this infographic and the entire micro guide. So when you click on one step, you go into that topic. And this is, again, just takes out the highest level information of each chapter on that page. And you can, go back and forth. These are the different chapters up here by the bullet points that I'm hovering over now. We've put the chapter up in the left-hand corner of each of the corresponding steps. And then we have a jump topics for you to go up and down the page. So you don't have to scroll down. You could go down to business case scenarios. You can go to additional resources. So this gets to our point about making it a living document. We added a lot of additional resources that we had on value chain finance. This is our video series, What is Value Chain Finance? So it's sort of the guide plus version. Even though it's a higher level version, we added a lot of material to it. So I think it's very self-explanatory. You can use this website in your trainings. You can use it to provoke a discussion in a management meeting. We'd really just tried to make it as user-friendly as possible. And then this gets to the point of the person that was asking the question, are you going to be putting up more examples? And this site will allow us to add resources as they come to us. So we really do hope to keep it what we've always, at the start of this initiative, called a living document. So that's what I wanted to share with you. Again, you go to our webpage, it will be very much front and center on our homepage, and then you click and you enter the microsite. You can always get back to our homepage by clicking the upper left-hand corner of this microsite. So here is the main homepage. That will be featured in one of these three main boxes below. But yeah, so that's what I wanted to show you on the site. I'm going to stop sharing our the screen right now and just wrap up the webinar today. So without further ado, I'd just like to thank everyone for joining us today. A huge shout out to Michael and Carlos for their participation today. And as I said earlier, and more importantly, your dedication and work on this project. We could not have done this without either of you. So thank you very much for your time. Before ending today's webinar, though, I'd just like to remind everyone about a couple of things. First, we have a great line up of upcoming webinars already scheduled till the end of June. As I said, Michael will be presenting HDFC's dairy value chain model and sharing how that's developed over the last several years. So be sure not to miss that out in April. Keep a lookout for adverts and notices on that. Other topics that we're organizing webinars around is on warehouse receipt systems to share experiences of the World Bank and IFC joint work on this topical area. We will also be featuring the work of our colleagues at CGAP and all the wonderful work they've done on the financial diaries. I believe it was in Pakistan and Tanzania, and there's a third country I'm forgetting. Also, Root Capital will share their extensive experience in servicing what they term the missing middle of the agricultural finance market. The second reminder is just about all our great resources and range of resources. We've really, over the last year, have many new practical tools and resources for bankers. We have developed the Agricultural Finance Video Clip Series, these short clips that also can be used in many ways to train your bank staff or provoke a conversation at management meetings, or to use that in your support work or advisory work to agri-finance projects. We also have many technical resources, guides, training manuals, and product sheets and that have emanated from our technical advisory projects with banks in Africa and Asia. Those are all on our website, so they're freely available online and available in various mediums, through video, through our AgriFin apps and that. So get online and check out all those resources. Lastly, but very importantly, as always, we'd like to ask you to stay online just to give us your thoughts about today's webinar by filling out our survey. that should be appearing on the screen right now. This really helps us to improve the quality of future webinars, so please do take 1 minute out to fill out that survey. In the meantime, if you have any remaining questions about this webinar or any of the other resources or events that we organize or sponsor, co-sponsor, please do send us an email at send us an email that's available on our website at www.agrifin.org. And just in closing, again, thank you to Michael and Carlos for sharing your knowledge and your experience on this very important topic. I'm sure all of the lessons that you imparted on us today will help to further guide the professionals that were on the call today. So thank you again for taking time out in your busy schedules or waking up at a very early hour in the morning. So with that, I'd just like to sign off and say goodbye until our next webinar next month. Thank you. Have a great day.